Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 8th of February, 2021, about 6:05 p.m. Central Time. Well, another day, another set of records in a number of the stock indices. We're getting a little bit of correction tonight as the markets are doing something of a pullback. Remember, we have the President Trump impeachment trial kicking off tomorrow. Don't know if he'll be present or not for it. I know they said he's not going to testify. The second thing that we'll be looking at, of course, is the economic data that gradually starts coming out. We start off tonight with a lot of Chinese data. I'll be reporting that in my full research. Wednesday, we have Fed Chair Powell speaking before another group. And when he speaks before that, we'll all be looking to see what does he think of what the Biden administration is proposing. Janet Yellen, our Treasury Secretary, was very vocal. Spend big, she said on Sunday on national TV. I get it. It's easier to spend big and correct the problem than it is to go into a melees and try to pull the market up. It's like deflation. Once you get it going, you got a real problem. It's easier to tame inflation than it is to pull that nose out of deflation. Trust me, just study it. If you're a student of economics, you'll see. It's interesting that the energy markets are able to stay, I think today was 5 days over the upper Bollinger Band. You don't see that very often. We'll see if it can continue. Dollar was down a little bit, but we saw reversals in some of the currencies. One day doesn't make a trend, so I don't count on that much of anything. Bonds and notes fairly flat. The new cryptocurrency, I think it's called Ethereum, that began trading first day today, and I am going to cover it, but I got to get chart data on it, and that'll take us 30 to 45 days, but I will cover it, I promise you. So when we take a look at the S&P 500 index, you can see the market's just staying over that 18-week moving average of closes for the week. We're into Tuesday night. We're up 27 points, about 0.7 of a percentage point, but it's a new all-time high. An all-time high if you were to end here, which we're not going to, close. When we take a look at a daily bar chart, these are new highs. Once the market was able to come in here, remember we were fighting this resistance last week, you got over that point and then you followed through again 2 days in a row, very strong, top part of the day's range on closes, and the market just continued up, and we'll see what today offers, but it's still looking pretty good. In terms of the swing line, here's the dilemma for a lot of traders like me. You come down, you bottom out at 36.56, and you go right on up almost, 250 points. How do you catch it? In order to have caught this, you had to be a bottom picker. Maybe you bought over here to catch that move. Well, how much pressure were you willing to take? And to say that you're good enough to catch it as it turns right there without a trend, because that's not a trend trade. This was a vertical price decline. This is a vertical price rally. The rally's stronger than the decline was. What about moving averages? We are over the 18-day average, so I'll go on record as telling you the first challenge of 38.1980 or wherever that 18-day average comes in. That's where I look for the support to be tested in the marketplace when a correction comes in. The resistance is right here. You're kissing the upper Bollinger Band. If we take a look at today's high, it was 39.11 and a quarter. The Bollinger top's 39.13. Let's call it and a quarter, round down, so it's close to it. Not quite there, but knocking on the neighborhood of it. We'll see if it can continue from there. And you're overbought as can be. You're not embedded. To embed, you can't count today because we don't know how Tuesday's going to finish in the market. So you go to Monday. Both numbers were over 80. They weren't that way the day before. So the most you can have today is the second day where both numbers end up over 80 in the slow stochastic. You've got to make it through the third day, Wednesday, and then we can talk about what happens on Thursday. Right now, overbought into a resistance point, vertical price rise, not trending. That's my definition as a chartist. That is not the story in the Nasdaq. The Nasdaq has a pattern of higher lows and higher highs. That is my definition of an uptrend, at least. It too is overbought. We cannot count today's action because we don't know how Tuesday will end up. We had both numbers over 80 on Monday. And we had, let's go to Friday, not that case the other days. So similar, you're overbought. If you can rally further, 13,833 is the target number on the upside in an overbought market. When we come to the Dow, it too is in an uptrend. Higher lows, higher highs. So see the difference between a vertical price rise? You get that dip in the market that gives you the pattern of higher lows, higher highs. That's why I think swing lines are so important. You don't see it without the swing line on your chart. With it, you know that support's expected here. What would break the pattern of bullishness? Getting under the low here at 30,412, and in this market at 13,348. Those are the numbers you'd have to break through. In the Russell, we now have what was today? Let's just take a look. The settlement today was 2285.80. You are over the upper Bollinger Band. Tonight you're still over it, pulling back towards that number. It's 3 days in a row over it, including today. I don't know if you were here over it. Day 1, 2, 3. Could be 4 days in a row today, including it. Similar to the S&P, this is one of those markets that went down and all of a sudden just took off to the upside. When that happens, I'm sure some of you have ways you can catch it. I don't. So I'd rather be honest, say no. I'm more of a traditional chartist, and I like that, in that I'm looking for patterns to develop. I knew that you can't be short. That to me is worth everything. And I get letters from my subscribers telling me, say, Ira, you don't have to catch all the moves. You're telling us you can't be short of the Bollinger Band. The odds are you're not going to stay under it. Pros are taking money off the table, especially the first time you hit it. That doesn't mean I turn bullish. And I've said that to you over and over. With a trailing stop, you'd have been stopped out and not even caught into all that. So that to me is the important part. In the VIX, another one of these vertical price declines, 16 full points. That's huge. Just huge. And as you can see, the market's still falling. This market is not saying at all, I need to have insurance. This market has just got the risk-on mentality. You'll see that change when the market gives you the bounce. In the bond market, the market's acting like it doesn't want to stay under the lower Bollinger Band, which is what I'd expect. This is called riding the band. In other words, each day you're hitting that number, and as you're hitting that number, you're not embedding, you're just riding it down. The trend has been down. I think that the pros took money off the table right in here. Then they have a trailing stop over each day's prior day's high. When that gets hit, I think they'll step out of the markets. In the T-bond market today, I want you to look at what the market does. The low today, 136.14.5. The Bollinger Band, 136.14. That's close enough in an oversold market. As far as I'm concerned, you hit your target. And to get a bounce from here would be totally logical. It's hard to go short a market that's already oversold. And I don't think a lot of traders are going to want to go short into Fed Chair Powell's speech as it comes out on Wednesday. In the dollar index, the dollar's backing away from an overbought situation against the upper Bollinger Band. It never did embed, so now the correction is underway. If the market wants to give a full correction, the support should come in at 90.66. I'd be looking right at that 96.6.5 you can round it to. You don't want to see prices under 90.33.5. Barring that, if the market gets away with both numbers under 70, I'd expect to see the pros buying. I don't expect to see them buying if either of these numbers, and it'll be the blue one, is still over 70. It's that simple. Doesn't mean the trend has changed. Eurocurrency, bouncing away from what I told you last week where I thought major support was uncovered. The combination of the 100-day average and the Bollinger Band. What more do you want? You want to keep playing that, oh, it's going to just keep not paying attention to the algorithm, the Bollinger Bands? No, and the major moving average of the 100? You can, and you might be right. I think the pros took money off the table. I frankly think they're fully out of the market. Even if they had a trailing stop, they got to get stopped out if you take out that day's high, which is what I think occurred now. So now where's the resistance? Because that's what you're still looking at in a downtrend. I say it's 121.06. Support's still very strong at 199, right in that general area. In the British pound, do you get out or do you stay long when you hit a Bollinger Band top? Well, I know what I think. I think the pros will take money if it gets out back up there. Are we trending? No. You've got a lower low, higher high that's sort of just traveling back and forth, as I've told you before, in no man's land on this. A very hard chart. In Bitcoin, well, all it took was Elon Musk today to say, we bought $1.5 billion as Tesla of Bitcoin, and we are studying now getting ready to take Bitcoins as payments for Tesla. Now there's your first major real vehicle that can be bought with a Bitcoin. So that's a change, and that gives a degree, it's an S&P 500 company, right? So this gives a degree of legitimacy that for a transaction. I still never believe Bitcoin will become the vehicle for the cryptocurrency exchange. I think it's a storage vehicle. I think it's a vehicle that is a commodity that you're not going to produce anymore after this next round of production, which is already down 50%. And because it owns most of the market share, the lion's share of it, it's the most popular. They'll try to get the other cryptos to act like it, and you've got a number of them that are trying to, but I still don't see commercial value out of them, but that's me. And guys like me that thought that, well, this is a market that just keeps going up and up and up. So understand, now everybody's saying you've got to own some for your portfolio just because you feel left behind. I get it. I know how it works. In the futures market, I think the margin's $60,000 on this. How do you trade it? I don't know. It's pretty crazy. I know many of these firms the margin's almost bigger than the contract is worth. It's quite a bit. Remember, these are, I think it's 5 Bitcoins make up the contract. That's a lot of money. And when you go to the new Ethereum, it's 50 of them, and they're trading at about $1,500, $1,700 a coin. So they're going to use 37%, according to the CME group right now, is the margin of the value of those 50 coins. It used to be dollars. They're going by percentages. I don't think the exchanges know how to do this. And it's not an insult to them. It's just the volatility in them are over the top. In Brent versus WTI crude, as long as you stay under the 18-week average, the differential, the pressure is on them to stay close and narrow more. When we look at the market, 1, 2, 3, 4, 5 days in a row over the upper Bollinger Band. On my rule of thumb, I'm out of fingers. So if tomorrow's not a down day, it's one of those few times that you are able to close 6 times in a row over the band. Does it mean anything? Not anymore that the market is saying it's very bullish. Is the market ahead of itself? Maybe. Maybe. You cannot count tonight. So going into Monday, both numbers over 80, not that way the day before or the day before. You're not embedded. So do I think the market is stretched out? Let me go on record. I do. Am I bearish? No. Do I think you have to run tight stops if you're long? I do. And why? Because you're over the Bollinger Band and you only stay over it 5% of the time, and you're now really far into that 5% part. Same thing's going to be true to me of WTI crude. What about embedding here? This could be a different story. You can't count today because we don't know how today's going to finish out. Both numbers were over 80 on Monday. Both numbers over 80 on Friday, not Thursday. Again, the key in this market's tomorrow. If it embeds, that's a different story. Well, here's what the story would tell me. Story would tell me that the break should be fairly shallow in the market. Otherwise, you lose the embedded reading. I wouldn't be expecting that right away. So it will tell me a story if it can stay up tomorrow. Again, I stay with what I teach and preach. As we look at heating oil, I expected another update over the weekend. You know how cold it is. And we've got 1, 2, 3, 4, 5. We'll see if it can stay over. And if we take a look here, we removed today. This is a different story, though. Both numbers over 80, both over 80 on Friday, both over 80 the day before and the day before. This is a fully embedded reading, riding the upper Bollinger Band, telling me that the pullbacks in the market should be short-lived. In other words, I don't think they're going to be just come crashing down on you. I could be wrong, and if I am wrong, we'll see it by the red line closing under 80 often. Momentum leads price. When you're this stretched out, I've seen them both go at the same time. Let me come here. Natural gas. Not very good action for all that heating we've got to get. I think that natural gas is more focused on the fact that we added 4 more oil rigs this week and 4 natural gas rigs. And there's plenty of natural gas around. And obviously in this cold that we're getting, the first serious cold we've had in a long time, the demand is there, and we keep saying that the support's the 100-day average, and notice how the 18 is coming up to it. But the market is overbought, observing the resistance of the upper Bollinger Band. The trend is up, but very overbought. Want to remind you, our guide to technical indicators. If you've never seen these, think of them as a primer. You see me talking about some of these indicators. Well, there's a lot more indicators, and maybe you don't know about them. It's from the different types of price charts. You saw me do area charts here, but there's point and figure, candlestick, I can go on and on. There's different types that you can work with. Different oscillators. I happen to work with the slow stochastic. You might work with MACD, relative strength. Fibonacci, Gann numbers, price-time relationship. I certainly work with that on the Arun indicator that we talk about from time to time. And money management. Are you not watching swing lines? That's money management. Where would you be wrong? What breaks the trend of a market? To get all that, all you need to do is go to our website under free offers, choose what you want, we'll get it out to you. I'm Ira Epstein. You have a great day. Thanks for watching. Click it if you like us on YouTube. I'd appreciate that. Have a good one.